Welcome to The Explainer. So if you stop and really think about the origins of modern technology, I'm talking about everything from those clunky first portable communicators to the massive, sleek data centers and EVs that are literally defining our world today, there's one absolute constant. They all need power. And specifically, they need stored power, batteries. Well, today we're breaking down the IPO of Ardee Industries, a massive circular economy player sitting right at the bedrock of that entire ecosystem. Is this offering a golden opportunity or kind of just a risky bet? Let's get into it.
To make sense of all this, here's our roadmap for today. We'll hit the business of recycling, look inside the IPO numbers, check out their explosive financial growth, weigh the strengths versus market risks, and finally deliver the final investment verdict.
All right, part one, the business of recycling.
So Ardee operates right in the beating heart of the circular economy. Picture this. They collect lead-acid battery scrap, and they process it at this absolutely massive facility down in the Tirupati district of Andhra Pradesh. We're talking an installed capacity of over 156,000 metric tons a year. From all that scrap, they produce high-purity lead and alloys. This stuff feeds directly into end-user industries, think automotive, batteries, and the booming EV and renewable storage sectors. And they're not just local. They've got a solid global footprint, exporting to over 7 countries, all backed by their London Metal Exchange registration for Ardee Lead 9997. Pretty impressive, right?
Moving on to part two, inside the IPO numbers.
Now, what's truly wild here is the sheer speed of this whole process. This window is incredibly tight, guys. The issue opens on Wednesday, August 5th, and bam, it closes just 2 days later on Friday, August 7th. By Monday the 10th, the allotment is finalized, refunds or share credits hit by Tuesday the 11th, and they are gunning for a lightning-fast listing on the exchanges by Wednesday, August 12th. Seriously, if you're watching the space, you gotta move fast.
Looking at how the pie is sliced up, the investor reservation is structured pretty standardly, but honestly, it's quite favorable for retail. You've got a maximum of 50% reserved for qualified institutional buyers, at least 15% carved out for non-institutional investors, and a really solid, healthy 35% reserved specifically for retail investors like us. Okay, so where exactly is all this money going? Well, out of the roughly 426 crore rupee total issue size, the vast majority of the fresh capital, about 220 crore, is pure fuel for their circular economy engine. It's earmarked specifically for incremental working capital. There's a much smaller 20 crore chunk designated to pay down borrowings, and the rest is just set aside for general corporate purposes. So the takeaway here? They're raising cash to scale up operations, not just to bail out old debt. Okay, part three, explosive financial growth.
81%. Yep, you heard that right. That is their return on equity for FY26. That's a truly massive capital efficiency metric. It essentially tells you that for every 100 rupees of equity, they're generating 81 rupees in return. That is huge, and it sits alongside an equally impressive return on capital employed, or ROCE, of 44.26%. I mean, these are the kinds of margins that absolutely demand attention.
And you know what? That crazy efficiency builds directly into their top-line growth. 58.81% is their 3-year compound annual growth rate for total revenue. This aggressive, just relentless growth pattern has pushed their projected FY26 revenue to a staggering 1,168.88 crore rupees. To put that into perspective, they've effectively more than doubled their FY24 revenue of 463 crore in practically no time at all.
But hey, all that top-line revenue growth isn't just vanity metrics. It actually translates to serious bottom-line results. We're talking an 84.68 crore rupee profit after tax in FY26. Get this, that is up an unbelievable 155% from the previous year. Their PAT margin basically doubled, expanding to 7.25%, with diluted earnings per share jumping from 332 in FY24 to a projected 33.27 in FY26. Just incredible momentum.
Now here is perhaps the most comforting metric for anyone out there sweating the risks. Crucially, management has aggressively de-risked their balance sheet. They took a highly leveraged debt-to-equity ratio of 4.87x and heavily slashed it down to a way more manageable 1.25x as they head into the public market. So they're growing at light speed, sure, but they're doing it while actively cleaning up their liabilities. That's a big deal. Which brings us to part 4, strengths versus market risks. Because let's be real, there's a serious tug-of-war happening with Ardee. On one hand, you have these phenomenal strengths. They're riding massive macro tailwinds. The booming EV, solar, and data center markets, they all desperately need recycled lead alloys. Ardee's got those globally recognized LME brand credentials, and they're actively expanding capacity.
But, on the flip side, they face some critical single points of failure. They rely on a single manufacturing plant in Tirupati. If something goes wrong there, production just stops. On top of that, they have heavy import and forex exposure, and incredibly high customer concentration. They rely heavily on a few major clients like Amara Raja. If they lose a top client, it's going to hit the bottom line hard.
Yet, despite those structural vulnerabilities, the informal market is honestly pretty optimistic right now. The Great Market Premium, the GMP, is currently sitting at roughly 14 rupees. When you add that to the upper price band of 53 rupees, it points to an estimated listing price of around 67. That represents a potential 26.4% gain right there on listing day. Now remember, the gray market is just an informal indicator. It fluctuates all the time, but it for sure shows some strong subscription momentum out of the gate.
All right, let's wrap this up with part 5, the final investment verdict.
So what does this all mean for you? Well, it really comes down to your personal time horizon. For the short-term folks, the goal is obviously to apply for listing gains. And honestly, this is backed by a really attractive valuation. Ardee is coming in at a PE multiple of around 19.7x, which looks like a steal when you compare it to industry peers sitting way up at a 30x multiple. The strong GMP backs that up perfectly. But for the long-term investors, Ardee offers a remarkably strong fundamental profile in that vital circular economy sector. The catch is, you absolutely must be comfortable with the fact that their stellar 81% ROE is tethered to some very real geographic import and customer concentration risks.
And that brings us to the ultimate question you have to ask yourself today. With these staggering growth metrics, a freshly deleveraged balance sheet, and a business model that is perfectly positioned to power the actual physical origins of modern tech and green energy, is Ardee's circular economy a revolution you need to buy into, or is it a house of cards? It's a fascinating balance of explosive growth and foundational vulnerability. It definitely leaves us all with a lot to chew on before the market opens on August 5th. Thanks so much for hanging out with me on this explainer, and I really hope this gives you the clarity you need to navigate this offer.